Everybody, so this is a short video about kind of my view on the market and how I think that for those of you who are looking to trade the market should view or at least consider this perspective. So the market is full of participants. So one of the great things that being a trader or having this kind of I guess you could say 2 or 3 sided viewpoint on certain things, because I mean you just live long enough and you realize that everything that you do there's a pro and con for yourself, and everyone you deal with there's a pro and con for themselves too, and you're trying to get the best of both worlds. In the stock market there's a lot of players. There's traders, people who buy and sell. There's market makers, people who decide what the price is. There's also kind of your financial media, which has their own little narrative spin on it. There's politicians who have control over certain policy. There's company owners or CEOs. Then there's your influencers. Traditionally, influencers were people like Warren Buffett, Peter Lynch, Bill Ackman, Charles Munger, of course. And then nowadays there's Wall Street Bets, the Reddit crowd. There's people on social media, whether it be Twitter, Unusual Whales. You have your Quiver Quant, and just various people on YouTube and such. And the only truth that we have in the stock market is price, okay? And everyone can see price because that's how much the market, all participants in agreement, are willing to pay or sell. And at that exact moment in time, the price is fair market value for all the participants in this transaction, provided that they themselves take part in the trade. It is an equal amount of risk that both the payer and the payee are willing to accept on either side of the coin. So, because I like to use Apple all the time in my examples, I don't know why, it's easy to say, because it starts with A. If Apple is trading at $163, that means that for right now, there are enough people willing to sell Apple at $163 and enough people willing to buy Apple at $163 to keep that price right where it's at. And that means that dollar-wise, people are willing to give up their hard-earned money to purchase it, and people are willing to bet that their hard-earned money is worth more than Apple is. Does that make sense? If it doesn't, then you need to revisit fundamentals of trading. Okay, not the market. The market is just a place where traders get together and trade things. So just kind of look at that as your view, or as the view that all market participants kind of need to have as their kind of screen when they're looking at things, because some people can be misled into believing that something is a great deal. You'd be stupid not to buy it down here, or you'd be stupid not to sell it up here. You gotta remember, every time you do that, every time you think you'd be stupid to buy it, or you gotta be stupid not to buy it down here. Like let's say Apple goes down to, I don't know, $50. $163 all the way down to 50. Do they know something you don't know? Probably not. Everybody knows everything in nowadays, internet market information age. So how can it be that you think that Apple is a definite buy underneath here, while there's so many other people and the market as consensus have decided that the stock is now worth $50? You have to remember, the market does not care about cash flow, about balance sheets, about income statement, about geopolitical risk, about taxes. All the market cares about is what the participants are doing. So something could trade for an abnormally cheap or expensive price for perpetuity if the traders in that market believe something. And many times traders are not looking at the overall aspect of the company. They could just be looking at the one thing that's truth, and that's the current market price. So yes, many traders have we're all human. I am human, believe it or not. So we all have these kind of, I guess you could say, emotional assumptions or emotional kind of things. I mean, when we trade, trading is very emotional. To be a good trader, you have to be able to take the emotion out of the trade. Meaning you can't be like, well, I thought Apple was going to be a buy at 150, so I'm going to just say if it's below 150, I'm just going to keep buying because I think that's what it's supposed to be. As a trader, you have to say, okay, market is telling me, information I'm getting right now is that the price is 148. Based on the information that the market is showing me now, however you do technical analysis, or however you determine your trading plan, whether that be option trading and volatility, whether that be chart trading, trend lines, RSI, EMA, SMA, whatever indicators you use to determine your thesis, are those things still the same? Because price is just a number on the screen. It's like a video game, But the circumstances in which you trade should always be based on current information that you have, not any kind of bias that you have. And I think that's one thing that people really need to understand when they make trades, because if not, they're just going to get gobbled up. Because you got to remember, when you enter a trade, you have two possible outcomes, right? The stock could go up or stock could go down. When you trade options, when you're short premium, you have a little bit more factors at play. Things like gamma risk, vega risk, theta, and then you have, of course, delta, which is the easiest one to kind of figure out, because that's really the only. Granted, you have dynamic delta, which makes it difficult, but that's kind of like the only thing that looks like the stock price. But in anyway, you have things that could go right or things that could go wrong, and it's 50-50 when you buy when you trade stock. So when you look at it that way and you see that, wow, I made the trade, I was wrong. So because you were wrong, how do you know you were wrong? Maybe you're too early, maybe you're too late. Do you decide that because the Apple price of 150 is some magical emotional tie in your head? It can't be. It has to be the trade setup was wrong, or the trade setup is right, it's just not happening right now. And maybe, like I said, you're using the 4-hour oversold as an entry point target. Maybe you're a little early in this 4 hours, or maybe You know, the hourly chart is what the levels are working today, or maybe it's the 1 minute chart and you have to be quicker, or maybe it's a daily chart and you're looking at just a daily reversal. And you know, what time frame and what kind of assumptions are we making here? And for traders, it's really important to be aware that the charts, it's gonna go back on almost everything I just said, but the charts, while they are an interpretation of the current market data of now, that data can be interpreted in so many ways that it's great for engagement. It's great to use it to create maybe more statistical entry points, but it's still not perfect information. The only truth, again, I'll say this, is price. So you could have a gigantic 10-year island reversal pattern, but embedded within that pattern is a sell-off, a downtrend. And you know how you can tell? The price will change. Not volume, not RSI, not trend line, not island reversal pattern, not a head and shoulders. Price. So, even though with all the technical, like I opened up my platform and I found like indicators that I'm pretty sure are made up. Like the developer of the software just decided, you know what, this sounds cool. Let's go ahead and use this one. Name it whatever we want. You know why? Because we can. So what? You know, I mean, these indicators could be meaningless. They could have no bearing onto anything that even makes sense for price. But yet people are using it. And why? Why does it work sometimes? Because buying and selling stocks is a 50-50 chance. 50% of the time the indicator is going to work. Right? Price can only move in one or two directions, up or down. I mean, quite literally. So, what then? What I have to say? Be safe. Be smart. Set your stops. Don't be attached to any trade. If you are a tasty trade, you trade often. You trade small. Trade small. And I'll see you the next time. Bye-bye.